So let's talk a little bit about the SPAC. Just out of, before we get too far down the rabbit hole on this, can you share what kind of revenue you're producing with your current company?
Yeah, so we're projected to do about 24 million in revenue this year.
Okay,
Um, and it's up from 15 million last year. So, so the growth has been nice. I mean, it's funny, when we were smaller, we were growing at higher percentages, as it makes sense, but
sure.
we're
Yep.
continuing to grow at a nice pace. So we made a decision to merge with a SPAC because in the cannabis industry in particular, we see that there's an opportunity to be a consolidator of various marketing and advertising technologies that are servicing the cannabis industry. And we felt it was going to be a more efficient way to be a consolidator and to be a buyer of those technologies if we not only had the NASDAQ currency, but we had the cash that came along with being a public company to be able to make those things happen a bit more efficiently. So, there's a number of different ways to go. You can continue to raise growth equity through private investment, which is definitely a path that I'm sure, a lot of companies use, a lot of your listeners use. We chose the SPAC route because when we felt if we want to be a consolidator, we wanted to get more efficient. And we thought that approach was going to make it a little bit more efficient for us.
So for someone that has never heard of the term SPAC
What does
before,
it stand for? Yeah.
what is what's it?
Special Purpose Acquisition Company is,
Okay, and you said
basically what it,
you're being acquired by
yeah.
somebody else?
So the way it really works is you have this public entity that doesn't have an operating company. They have shareholders, they have cash.
Give me an example.
Their list. So there's thousands of these companies, and I would, this is kind of like the old term. It was like if you ever heard of the term a shell company, right?
Okay.
So it's like the new version of what the shell company was. A shell company was they're a public company, but they don't have a business, right? They just have shareholders and money that is sitting there that is basically looking for a company to buy, to absorb into their organization so that they have a public operating company. So
Okay.
SPACs, a little bit different. They're created for the purpose of buying a company like ours, merging it into the SPAC, and then the company that they buy becomes the operating public company. So they raise their money. They raise the money to make these acquisitions with that specifically intended. That's what they're intending to do.
So what's the benefit to you, the entrepreneur and founder? Like, what happens to your equity when you get acquired for the SPAC?
Yeah, so obviously there's some dilution, right? Because you're merging the value of our business with the value of the cash that's sitting in the SPAC, right? So there's some dilution, but the benefit to us is it's a faster way to get onto the public market. The SPAC has done the work, right? They're already listed on NASDAQ. They already have the money. They've done all that work. So you don't have to go through the whole IPO process. You could get bought by a SPAC and then you become the public company. So it's faster. The other benefit of a SPAC is you do have the ability to outline future projections. So you could tell investors where you expect to be in 23 and 24, where you don't have that ability to do when you're an IPO. You don't have that opportunity. Legally, you can't do that. So the benefit for us is that it's a faster path to get to the ultimate, the end game, which is what we want to do. We wanted to be a public vehicle that we could then leverage the currency, both the stock currency and the cash, to be able to grow non-organically.
So is this a better deal for the entrepreneur that's